Hello, my name is Ian Hunter. I'm the founder and portfolio manager at Hunter Value Capital. I'm speaking today with the founder and chairman of BANXA Holdings, ticker BNXA. This is Domenic Carosa. The following does not constitute investment advice. It's for entertainment purposes only. And Hunter Value Capital does manage accounts that own BANXA shares. Domenic, thanks for joining me today.
Thanks for having me on the program, Ian.
So just to set the stage for investors who are thinking about why BANXA might be attractive to own, if I were to summarize it in one key idea, I think of BANXA as an Australia-based payment services processor to the crypto space that provides the on-ramp for customers of dozens of the most well-known crypto exchanges and wallets, enabling those customers to fund their accounts using euros, USD, Canadian dollars. And then once they're on board those platforms, those customers are there to convert that capital into crypto. But BANXA takes a percentage of the funds that it's onboarding, and that fee is between 0.5% up to 5% of that total transaction value, the TTV that they have helped onboard. Is that a good starting point for investors to understand what you do at BANXA?
Yeah, Ian, I think that's a good summary. So just to maybe, I guess, take a step back, and maybe I know some investors like to put companies into a box, and we're a bit like the Stripe or the PayPal specifically for the crypto industry. And if you believe the hypothesis that Bitcoin and crypto and the whole ecosystem is here to stay and to grow, and we also know that most people still exist in the fiat world. When I say fiat, I mean US, Euro, Canadian dollar world, and they're going to be making this shift into the digital asset world, then companies like BANXA that provide the infrastructure, the payment infrastructure, the compliance infrastructure. I'm sure we're going to talk more about compliance and regulations as part of this. In my view, will be the companies that will be able to prosper as part of the growth of this ecosystem.
Okay, so if we were to think about your unit economics at a very simple level, the gross profit margin that you get on the total transaction volume is say 1.5% to 2% for most periods. And your most recent quarter ending in June, you had a TTV, total transaction value, of around $290 million. And that was up from $200 million just in the prior quarter. Do I have that right?
Yeah, so the TTV is right from roughly 100 mil in December, quarter 200 mil in the March quarter, and just shy of 300 mil in the June quarter. The best way to, I guess, from a margin perspective is you take that TTV, you take roughly 4% as effectively the gross, 2% is the net GP, and then below that will be employee costs, SG&A. I'm not going to, we don't have enough time to get into accounting nuances with regards to revenue recognition. Is it principal or is it an agency type revenue stream? Suffice to say, as our TTV grows, so does our revenue and our GP. And then over time, that will flow to the bottom line. And for the March quarter, we did just under $1 million of underlying EBITDA of profit. And so my view is it's a business that's highly scalable, low touch in that respect. And once again, I believe has significant growth opportunity. We have about 70 B2B customers to date, including customers like Binance, OKX, Huobi, some of the big players in the space. And yet we've still got a huge amount of opportunity just in the crypto and wallet space, let alone the fintechs, the traditional fintechs that will over time want to migrate into the crypto space. And what can we do as BANXA? We provide the payment rails, we provide the compliance, all through a single API. So whether it's crypto, which we've started today because we see that that's the low-hanging fruit, or we effectively provide our services to more traditional fintechs, it's the same underlying technology that runs the business.
Got it. And that TTV that was about 300 million, is that AUD or
It's
CAD?
AUD, yeah, which is almost one-to-one with the Canadian dollar,
Yep.
and just deduct about 25% if you want to get a USD equivalent, roughly.
Yep. And you're trading at about a Canadian dollar, $140 million market cap.
Correct. Yeah, or roughly about 100 mil US.
Gotcha. And so part of the service that you're providing to these exchanges and wallets, and again, we can talk about some of the world's top 10 largest exchanges that you are now partnered with, Gate.io, Binance, et cetera. But the part of the service you're providing is that regulatory compliance factor. Can you talk a bit about the challenges that competitors have in replicating this network of licenses that you've created, and why there's some scale advantage that makes you an attractive vendor to these exchanges and wallets rather than your competitors?
Yeah, certainly. Maybe just to take a step back, when we first got involved in the industry in 2014, there basically were no rules. It was a bit like the Wild West. Our view was always that regulation that is fit for purpose is actually good for the industry. And we got one of the first crypto registrations in the world in early 2018. In fact, Australia was the second country in the world behind Japan to actually issue licenses and registrations. So we've effectively grown up, as you say, as a regulated entity. Now, you only need to Google, crypto regulations to see that over the last 12 to 18 months, there's been more governments talking about rules and regulations, AML, KYC, PEP checks, and a whole bunch of other stuff. So the value proposition that BANXA provides our customers are payments, but you could even argue more importantly, it's the whole regulatory and compliance layer. You cannot operate in this space today, or at least operate legally, without adhering to all of these rules. And so for our customers, we take that responsibility on. We have a number of registrations and licenses around the world, in Australia, in the Netherlands, in Lithuania, in Canada, that allow us to basically operate and trade. And we're in the process of actually acquiring more licenses over the next couple of years. And how that differs to our competitors, I know that we actually own more licenses than a number of our competitors actually put together. And so that's part of the value proposition for our customers, is that we'll provide you the payment rails and both global and local payment rails. And what I mean by that is, if you're in Canada, we can accept credit card, but we can also accept Interact, which is the local payment method in Canada. And the interesting thing there is, in order to be able to accept Interact as a payment method, you need to have a local company like we do, and we need to be registered locally. And that's the big difference between ourselves and our competitors, is that we've actually gone through those hard yards and continue to do so because we believe that regulation and compliance is a core skill set in its own right. We have a whole department who just lives and breathes compliance on a daily basis.
Got it. Okay. So I like to break things down and think of them very simply to limit the amount of assumptions we have to make about the future. And if we don't make any heroic assumptions about the growth in the price of Bitcoin or the crypto world, but we just think about in steady state, if we assume that there's probably increasing acceptance and adoption of crypto as regulatory frameworks become more established around the crypto world. So you have an addressable market of hundreds and hundreds of exchanges and wallets out there, right? So that's one growth area, is winning new exchange and wallet contracts. Then you've got other products that you can offer, right? Could you talk about a few of those other things you can control?
Yeah. So today, our Horizon 1 model is really going after the crypto exchanges and wallets. From our perspective, that's the low-hanging fruit because that is where the demand is today. And what that means is that we have API connections, which is just another fancy way of being integrated with our exchange partners at the wallet level, at the finance level. So it's actually very deep integration. Over time, our Horizon 2 is to be able to take that API and the payment infrastructure and add other products and services like interest-bearing accounts, borrowing and lending that are able to sit over the top of that payment infrastructure. And then all we do is just turn it on for each of our customers, and we can offer them interest-bearing accounts, borrowing and lending, and then they can make that available to all of their customers because we operate a B2B to C type business model. And we haven't even spoken about the more traditional fintechs and the neobanks who we know are starting to dip their toes in the water and wanting to get involved in the space. And this is over time what BANXA will be able to provide is not only the payment infrastructure, the compliance aspect, but also the custodial wallet. So it's effectively a turnkey solution for not only exchanges, but also fintechs, traditional fintechs that, in fact, it could even be a traditional bank, but a lot of banks are still maybe not at the speed as the fintechs are in terms of wanting to embrace digital assets.
So these fintechs and or banks could at some point in the future turn to you for custody as well.
Correct. We are just in the process now of upgrading a number of our licenses to allow for custody. And so that will allow us to effectively offer a custodial solution, payments, and as well as it being effectively a compliant environment in numerous countries around the world.
Okay, and so one more area of growth is being able to add coin payment methods as well as crypto that you can convert to. Is that one way to think about other?
So adding customers is obviously one. Adding more payment methods, we offer just over a dozen different payment methods to date. For example, in Canada, I mentioned Interact. In Europe, it's SEPA. Faster payments in the UK, Ideal in the Netherlands, so forth in other parts of Europe. And so being able to then add new payment methods, for example, and I'm just using these as an example, the Mexican pesos in Mexico, or the Thai baht in Thailand. And then all we do is literally flick the switch and then make that payment available to all of our exchanges and all of our partners. And then they can go and target customers in those particular regions. And that's the real leverage in the model. What we're effectively building and have built is a platform. And now it's just about leveraging that platform. The other way is that we will continue growing and adding more coins. We have about a dozen coins to date. We're going to add another 40, 50 coins over the next 6 to 12 months. And at the same time, there are other verticals like DeFi, which are actually growing rapidly, and NFTs. And I'm not going to spend too much time talking about DeFi and NFTs than saying they are new verticals in this ecosystem. And in fact, we've already started powering a number of DeFi platforms where you can go straight from DeFi straight from fiat into a DeFi coin and start generating a yield without having to be a computer science major and work out to go from fiat to Bitcoin to wrap Bitcoin or Ethereum, and then using something like MetaMask and SushiSwap. And basically, I mean, I would have lost most people when I start talking about a wrap Bitcoin. And so that's kind of what we're trying to do is really make it really simple for consumers out there through our exchange partners to onboard to this new ecosystem.
Okay, and so just kind of tying things together, if you're at about 140 million market cap Canadian, your last quarter was about $1 million EBITDA, is that right? So
yeah, for the March quarter, we did just under $1 million EBITDA. We haven't released our June numbers yet, In fact, we work on a 30th of June financial year. And so our audited accounts will be out over the next couple of months. So I guess all I can say is watch this particular space. And I guess the way that we look at this business is, we are believers in this new ecosystem. And what I will say is, when we first got involved, it was really the domain of the tech nerds. And I'll put up my hand and say, I'm one of those tech nerds. And what we've started seeing over the last 2 to 3 years is the whole industry is starting to grow up. We're now seeing many more institutions, high net worth investors and family offices start to move into this particular space. And it's no longer the domain of the nerds. And as this industry is growing up, it's also then moving, consumer adoption as well. And hence, my view, I sort of come back to my original, point is, if you believe the hypothesis that this ecosystem will only continue growing, then companies like BANXA that are providing the bridge between the existing fiat world, the US, Euro, Canadian dollar world, with the digital asset world, being Bitcoin, Ethereum, and the other coins, in my view, will be able to prosper. And for those, and I know some people are into mining and they like investing in mining companies, we're kind of like the picks and the shovels of the industry. That's effectively, if you want to look at us at an absolute core, we're part of the infrastructure, we're the picks and the shovels of the industry.
Got it. Thank you so much for being with us today, Domenic. I'm looking forward to seeing what you're able to do over the next few quarters.
Fantastic. Thanks for having me again, Ian. Cheers.